They want the maximum amount of return no matter what. Neither one is good, bad, right, or wrong. It's just simply what aligns with you. So for me, I care deeply about making a positive difference. And I actually believe that we can make more money when we care about people.
So you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithkatani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny, and I'm joined today by Amy Sylvis. Amy is the founder and principal of Sylvis Capital, a real estate firm that invests in large commercial real estate properties in emerging markets throughout the United States. Accredited and non-accredited investors appreciate investing alongside her to take advantage of not only her extensive expertise, but also her detailed research and exclusive relationships. Sylvis Capital offers commercial real estate investment opportunities without the day-to-day hassles of owning the real estate and generating strong returns. Sylvis Capital currently has 654 apartment units, 208,000 square feet of flex industrial space, and $70 million worth of assets under management. Amy, welcome to the show.
Thank you so much for having me. This is such a pleasure.
We're grateful to have you. We were joking in the beginning offline about how long it took you to get here. Probably about, I think, three reschedules, but we finally got it. Obviously, a lot changing, right?
Yes.
For good reason, of course. So much happening in the market, which we'll get to. But before we do, I know doing a little bit of research, it took you some time to not necessarily get into real estate, but kind of get it right. So kind of touch on when you first discovered real estate and kind of your journey up to now.
Yeah, absolutely. Would love to cover that. Thank you again. Well, I was really one of those people that was hell-bent on trading my time for money because it was really all I knew. I grew up here in Los Angeles, a humble lower middle class background. My father does manual labor to this day. He's 68 years old. And just this concept of needing to have a job in order to support myself was something that I never even questioned. So I went on to college and then to get my MBA with the hope of getting a bigger, badder job to get more income. I've had a few health challenges we can dive into if you'd like. I have cystic fibrosis, so it really forced the conversation for those who aren't familiar with the illness of, I don't know how much longer I'm going to be able to trade my time for money. So I better start creating a strategy of either compiling a huge pile of money that I can chip away at when I'm unable to work, or find another way to make money while I sleep, or while I'm on vacation, or previous to this health miracle that happened to me while I'm in the hospital. And thankfully, I stumbled upon that little purple book. I think all of us are familiar with Rich Dad, Poor Dad. And it really opened my eyes to this. Yeah, I'm like, have you heard of Robert Kiyosaki? It really opened my eyes to this concept of passive income. And I was really off to the races. Took me a good 10 years to get into this space, as you alluded to, but I knew it was going to happen one way or another because it had to.
I love that. That's awesome. And, it's funny, well, not funny, haha, but ironic because, you had a specific reason, right? And it feels like when you talk to people about whether it's becoming an entrepreneur or even just investing in alternative assets, it feels like there's always some reason they can't do it, which is so funny because it's not, I wouldn't say easy, but so many people have done it correctly before that it's actually, I would say, a lower barrier to entry in terms of getting into it and doing it correctly, as long as you're obviously willing to follow that. Now, of course, you add in humor and stubbornness like I have, and your mentors tell you to do something and you're just like, oh yeah, sure. Okay. And then, you figure, but ultimately what I'm getting at is that, with people like yourselves, right? Sylvis Capital, and sort of reaching out and taking the leap and doing that. And then of course, bringing investors along with you, it is a little bit easier than some of these other things that people sort of try to do, and arguably even harder, easier than a W-2, but that's subjective, I guess.
Yeah.
So kind of touch on, that experience for you and getting going and kind of, finally realizing it, that aha moment and bringing people with you.
I think you're probably like-minded, and maybe folks listening can agree that when you find something that maybe isn't discussed a lot, but you think can benefit people, it is so hard to not want to scream it from the rooftops. So, right? I mean, it's obvious.
Yes.
I'm kind of an extrovert. I'm chatty, but gosh, when I started to passively invest, that was the first part of my journey. I wanted to see how other operators were running a syndication business and learn from others' mistakes by having money in the game. After several years, then yes, I transitioned into finding my own deals and bringing investors alongside, and to see the benefits of how it's helped folks diversify their income, help them spend more time with their children or their hobbies, or maybe volunteering, or even just that singular peace of mind of, hey, if I get laid off from my job, I'm going to be okay because I have extra streams of income coming from other places. So to your point, yeah, were there fears? Has it been difficult here and there? Absolutely. But the juice is worth the squeeze because I see the stories of how much I can help people, and that really motivates me.
That's awesome. I love that so much. And it is awesome to see, like I finally got my dad involved in a deal just recently, right? So first distribution is supposed to be in February. So very excited to kind of see that, direct deposit hit his account. And I feel like that's going to be that moment where they're, because I had to kind of battle him a little bit, honestly, because he is that old school, much like yours, where, he's 66, I think, just turned 66 and still has a job, right? Didn't really start his 401k and understanding retirement, kind of an old farm boy. And so, kind of getting over that mental hurdle of needing a job and, passive income thing has been far more challenging than I expected it to be. But it's been incredible to kind of see his journey through that. And obviously I know you have brought many investors along that journey. So now you have a very solid portfolio and a nice diversified one. We were talking earlier about Flex. What caught your eye about, obviously you started in multifamily, right? The tried and true, but what caught your attention about the industrial space and specifically the Flex space?
I'm all about diversification, right? So even though real estate is what I do for the vast majority of my time, I still own physical bullion, gold and silver as investments. I still own paper assets, stocks, bonds, and mutual funds. So in that vein, why wouldn't I diversify within the real estate space? So to your point, multifamily, and I'm geographically diversified. So I'm in Texas, Alabama, Indiana, Tennessee, and such. And so Flex Industrial is just kind of a natural extension there. The great thing about Flex Industrial that I'm seeing at this time, specifically in the submarket where we invested in Kansas City, there's a lot of onshoring. I think a lot of us have seen manufacturing return back to the United States, and areas such as Kansas City are benefiting from that tremendously. And the Flex Industrial space also offers something that multifamily doesn't, which is something called triple net lease. So I, the owner, and my investors and I are not responsible for the property taxes, the insurance, and the repairs and maintenance. And during times of inflation and some of those costs that are quite frankly out of our control, right? Those are uncontrollable costs, tax and insurance, essentially. It's a lot of security that can provide. There's a lot of security there by not having those expenses fall on us, but rather on our tenants. So very attractive. And then of course, a great operator in the center of the country. So it was a great diversification play, and our investors were thrilled to have that offering and be a part of it.
That's awesome. Yeah, I couldn't agree more. So for those who are, because I honestly didn't even know, of course, we've heard of industrial, right? We think of warehouses. Explain just real quick what Flex Industrial is.
Sure. So yes, some of the space can be used for office as well. So yeah, some of this particular deal, there's an office space that is leased out to the same people that have some warehousing space as well. So provides a little flexibility there, if you will, in terms of how the space is utilized.
Yeah, and that's a pretty common usage, is someone who needs both office and warehousing space. But again, you're on that triple net, and you're really in that industrial space, which I believe we're still very undersupplied, if I understand correctly.
Specifically in this submarket and in this size. Yeah. So, I think you and I both understand, and the listeners do as well, that this, United States real estate market is really kind of a figment of our imagination. Everything is location, 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 right? So, yeah, specifically in that submarket, industrial space is highly limited. So another great reason why we felt very bullish about buying this property.
I love it. That's awesome. And so kind of touch on now, you mentioned partnering with a strong operator. Obviously now, partners and operators, especially the operators, are the most important right now, right? Due diligence, we're going to put our passive investor hat on right now. Due diligence of the operator is crucial right now. Of course, also, debt, and we can kind of get to that, but touch on, kind of your process, what it took to find this strong operator, understand how they work, and then ultimately to partner with them.
Great. I love this. I don't think it's discussed enough. So I appreciate you bringing it up, because I think it can be a make it or break it for passive investors. I encourage everyone to do what I do, which is evaluate values and kind of headspace and goals of operators. So yes, making money is incredible, right? We all are investing not because we're a nonprofit, but because we do want to make money. So understanding track record and understanding, underwriting and assumptions that folks make, but also what are their values? Some people care quite a bit about making sure that they're creating, for example, in the multifamily space, a great community. And some people believe that treating residents well, if it means maybe making 0.5% less IRR on the overall project, is worth it. For some people, that is not something that they want. They want the maximum amount of return no matter what. Neither one is good, bad, right, or wrong. It's just simply what aligns with you. So for me, I care deeply about making a positive difference. And I actually believe that we can make more money when we care about people. So maybe some people think that's a little Pollyanna, but I've seen it happen. It's absolutely true. So if I go the extra mile for my residents, they're likely to stay. And some of my biggest expenses are turnover expenses. So everything goes hand in hand. So kind of gone down a little bit of a rabbit hole, but essentially I would encourage people to really take the time to talk to operators and get to know how they make decisions, what their personal goals are, and what their values are. I think it's imperative.
Absolutely. Gosh, I could not agree more. That was so well said, and such great insight, right? And that's what's important, because, now it is harder to kick the can down the road and find a good deal. But, there was a period, and the period will come back, where you can kick a can down the road and find someone who can 2x your money, in 3 to 5 years. So it's important to find people who align with your values over anything, right? Know, like, and trust, right? As the old saying goes. And so that's what's important, is really understanding the people, why they do what they do, what their goal is. I love what you said, of course, taking care of people, making them happy. It's the same in the workplace, right? We've now have a ton of data to suggest that when you make your employees happy,
yes,
they perform better. So why wouldn't you have better tenants if you give them a better living space? That might mean a little bit less, like you said, on, the balance sheet, but ultimately in the long term, you've done something good, and it doesn't always need to be quantifiable.
Right. And sometimes it is quantifiable.
Yes, correct.
But to your point, yes, it is. It is whether it's employees that we're treating well, or our residents, or our property management, or our investors. I do believe that all comes back, whether quantifiable or not. And there are many ways we can choose to make money. And I talk to my investors about this all the time. You're investing in a mutual fund. What good is that doing in the world? I'm not saying it's not, but are you involved? Are you actively seeing how your money is impacting the world? We give our investors reports letting them know, hey, this gentleman was having trouble getting his stove working prior to Thanksgiving, and we were there to make sure that his stove was working so he could, cook for his family an amazing Thanksgiving dinner. That's meaningful. That's positively impacting lives. So we just love that. And we believe we can always find a way to have that positive impact.
I love that. That's incredible. And as someone who worked in the public sector for a while, I can tell you that, at least from my experience, and, I've been removed for a few years now, but there wasn't anyone out there preaching values of these, fund managers. You weren't researching, sure, you could look at the due diligence packet. I can't remember what they called it, but and see who the manager was, but you weren't researching them, understanding their values. You couldn't get them on the phone and know who they were or go out to lunch with them, right? You don't get that. But in this private space, you actually do get that, and it's encouraged, which is something that I love so much about this space. And oh, by the way, with that comes honestly better returns. If you look at everything over a risk-adjusted historical basis, even better returns than the public sector. So, you really get both, which is awesome. And one thing that I think people struggle with sometimes, because it can sound too good to be true.
Yes, I love that you say that. This space is so multidimensional. It's almost impossible to cover all of it, but I love that you mentioned those benefits as well.
Yeah, absolutely. So now we'll kind of pull out our muddy crystal balls here. Obviously, a lot of things changing. One thing we do know is, another rate hike coming next week as we're recording this on December 6th. What, if anything, we'll start with kind of your guys' strategy, right, internally. What, if anything, has changed for you guys just due to the economic landscape?
We're really refusing to give in to this need to always close deals no matter what. I joke with my investors that I have a feeling I frustrate them sometimes because I am not the constant flow of investment opportunities. I'm simply not. I am far too conservative. You mentioned your dad. My aging parents invest alongside me as well. And of course, my own funds. I want to make sure that we're buying something that makes sense in harsher economic times. And that means less deals are penciling right now. So I guess that's the first thing. I'm not succumbing to the pressure to identify and close a deal, even though, I think lots of people are interested in deploying capital. I think also we're taking a hard look at our debt structure. We were using bridge. We've done fine with bridge up until this point, but conventional financing with some of the GSEs, Fannie and Freddie, have horrible prepayment penalties, which may be which may bite us down the road. So local banks are definitely something we're taking quite a strong look into that seem to be reliable for some of the deals we've looked at lately. So I guess in summary, remaining conservative and making sure we're using debt and structuring deals that are the way that are most advantageous for an economic downturn.
Yeah, absolutely. It sounds like not much has actually changed, right? You guys have always been conservative, which, when you look at how this, should be done, right? In terms of, if you're a passive investor, right, this is a long-term mindset, right? And so
it is.
If you're always taking the, conservative underwriting, right? We just want to hit a single, you do that, of course, the home runs will come, but where the real benefit comes, and what I tell people is in these moments where how your portfolio is structured, your leverage, the debt you have in place, this is when being conservative in those times of everybody 3Xing and, whatever, this is when all those people are like, oh, shiz,
Yeah.
and those who are conservative are like, oh yeah, roll up our sleeves, but we're just fine because we've never over leveraged. We've never, gone out on a chance that hopefully interest rates come down or something, you know what I mean? And you're really going to see who set it up like that. And sounds like obviously that's what you guys are focused on. So what are you looking at in terms of, your debt structure and your deals right now?
Yeah, really depending upon the type of asset, but in a value add space, definitely a class B asset. Bank debt we're able to leverage maybe 55, if we're lucky, 60%, keeping that LTV or LTC, if we're borrowing some CapEx costs as well, keeping that nice and low. But yeah, making sure we don't have horrible prepayment penalties if, we decide to sell early. And yeah, rates are spicy. Rates are definitely up there, but it doesn't mean that that's bad, right? Our parents can remind us of a time when rates were double digit, right? We're nowhere near that. So it doesn't mean that deals can't be done, but we just have to be mindful of the basis of which, the purchase price of the project, what the value add strategy is going to be, and how the debt, considering multiple ways the debt can go of, what if we need to refinance? What if we need to roll into something else? We need to prepare for all scenarios when we're considering our debt options.
Yeah, absolutely. A lot of really great points there, right? That strong LTV or LTC, right? If we're doing a heavy lift, which it feels like those are fewer and far between now. More people going for that kind of class B, class A, stable core plus asset, which for good reason, right? The yield is kind of gone in that A to C gap. So there's no reason to go down to that class C.
Yeah.
Have any markets, we now have enough data. There are markets that aren't doing as well, right? And of course, when you pick a strong market, it's strong for a reason. Have any markets now popped up on your radar that weren't there before, or any taken off that maybe were there?
Let's see, how do I answer this? I think Kansas City, I'll be honest, wasn't necessarily on my radar, let's say a year ago. It was the shiny red ball syndrome of all the growth and net migration we were seeing in the Southeast was extremely attractive to me. But thankfully, I've surrounded myself with wise people, and I'm always trying to challenge my own beliefs of, okay, this is what's going on now. What is next? And if what is next is, there's been a lot of institutional and other attention running towards, one area of the country, what else can we think about in terms of how to get yield and get returns on a consistent basis in markets that may not be overheated? So Kansas City, I think, is extremely attractive, as is a lot of the Midwest. Indiana, we own in Southwest Indiana in a little town called Evansville, which is actually the third largest city in the state. I say little tongue in cheek, but again, steady Eddie markets that are business friendly. The state of Indiana, Kansas, extremely business friendly, job growth. Actually, net migration, not the same as what we're seeing in maybe the Southeast over the past several years. But market research is so key, and really using that money crystal ball, as you said, to predict, what might be coming down the pike next. And there are clues. There are definitely really strong clues that we use that we've been very successful with.
Absolutely. Yeah. When you look at, and it sounds like you're like me, pretty analytical. You like that, the spreadsheets and the underwriting and the market analysis, big data guy, right? That's what gets us going. And when you look at that stuff, you can make, so I was having this conversation over the weekend with one of my friends, and he was like, he's seeing what I'm doing. And so he's starting to get curious, and he's like, are there guarantees in that industry? I said, no, it's an investment like anything else. Right. But you can use data, and there's so much data available that you can make a truly sound decision, like investment decision, with enough data to support it. Now, there's still a chance that it doesn't work out, of course. But when you have that stability of all this data, right, you can feel so much more confident to not only invest yourself, but go out and raise money from other people and feel confident, preaching it to them. And, it just is fascinating, right? We're like, dove head first, but so many people just don't have access to this information.
Right.
So what is it like for you? We'll kind of touch on, there's some new people, new listeners. What is it like for you and helping new investors kind of understand this world and why, your research and everything is solid?
I love that you said about, nothing is completely secure or risk-free, but there are layers upon layers of risk mitigation strategies that we can employ. So for people that are, nervous or trying to understand the space of what can be done to make them feel safe, I love talking about those risk mitigation strategies. So to your point, whether in market research, kind of understanding or doing a case study of why a market was chosen that we chose before and how we've done there and what kind of clues led us to choose that market. Understanding just the basics of demographics and economic trends and how that can help us see into the future, if you will. And all of the resources. Some people love to see the resources that we utilize and how that data translates into confidence or forecasting where the next emerging market in the US might be. So I think full transparency combined with a nice, generous heap of education helps people feel like they understand and they're in control and they can make the best decision for themselves and their families.
Absolutely. I love that. And speaking of education, you're obviously a huge educational proponent, offer a lot of value, especially on LinkedIn. I know you've spent a ton of time, a lot of focus on LinkedIn. Talk about that. I guess now we can kind of put on our, capital raisers hat and our networking hat and kind of talk about why first you identified LinkedIn and what, kind of tips and tricks you've used to really establish yourself as a thought leader there.
Sure. I stumbled upon it. I'm not going to, I'm not going to lie and say that it was a big strategic decision I made. I was roped into the famous Jonny Weiss's LinkedIn challenge, which those of you who aren't familiar, he is the cost segregation king. But we all love him, not necessarily because of what he does, which he does his job very well, but of how much he gives to our community. And so he does this challenge where he asks you to post daily on LinkedIn and help other people in kind of this group he creates several times a year. And I just decided to try it and discovered how much I loved providing content and education to people to help them understand our space or maybe get an idea of what else could be possible in terms of their lifestyle design. So yeah, I joined it about a little over a year ago and haven't stopped posting daily since. And I'll be honest, people's, feedback of, hey, I never thought of it this way, or this is really helpful, or I feel inspired, keeps me going every day. I just love to be able to add value. And I think the fact that this platform operates on this go-giver mentality of the more that you give, the more that you receive really resonates with how I view the world as well.
Absolutely. Yeah, I couldn't agree more. It's definitely a space I've not leveraged enough. So something I'm looking to get into. Of course, Jonny, very famous. We've had him on the podcast. He's now a member of one of my mastermind groups, Raise Masters, which has been incredible to have him in there. Yes. He obviously just does nothing but provide value, right? He's really an awesome person. And it's been great to kind of see that. And do you look back on some of your earlier content and be like, wow, can't believe that's one thing that I've struggled and maybe you didn't, but struggled with what you want people to hear as opposed to what they actually, how they actually receive it and should hear it. Did you struggle with that in the beginning as well?
Yes. Isn't that all communication, right? Your job as the communicator is to make sure the receiver here's your intention, not necessarily, what you say always, it doesn't always come through. So absolutely. And I think that's one of the brilliant things about this challenge that Jonny does several times a year is you can really experiment. And you do have to be vulnerable. I mean, that's the other kind of, I think, key part of LinkedIn is, to not let, as they say, perfection get in the way of progress. So trying different messages and different ways of communicating is imperative. So whether it's utilizing graphics or pictures or putting up a poll or asking for people's opinions, I think I did something almost a year ago where I asked people, if they thought it would be more valuable to receive several kind of spread out payments of $1 million over time, over several years, or a lump sum. And just seeing how people kind of took that question and how they defended their position. And yeah, I do kind of look back and go, whoa, I didn't even realize what I was doing. I know my intention, but it really took on a life of its own. But I guess that's also the beauty of the platform.
Yeah, absolutely. Right. You never know what's going to spark something, or, how many times, posting something we're like, oh yeah, this is so valuable. And then, it's got the least amount of impressions, so you really don't know, right? You kind of do have to, and eventually you'll hone it in, of course. And as you build your investor group, you know what they're looking for, right? You can kind of hone that in. But yeah, in the beginning, there's a little experimentation, kind of split testing different things. And it is fascinating sometimes to see what things were like, really sparked it, and what didn't.
Yes. A lot of fun. I look forward to seeing you post on there.
Thank you. Yes, I need to. My focus has been Instagram because my avatar is a little bit more the millennial kind of on that. But
yeah,
Yakov Smart, obviously, like I'm on his list, and like really, going to start kind of honing those skills as well, because in terms of people, sophisticated investors, that's far more available on LinkedIn than Instagram, which I love. Awesome. Well, we'll wind down here. This has been incredible, Amy, by the way. Thank you so much for all this insight. We'll wind down here with the final 5. First question, best advice you've gotten from a mentor?
You go further faster with a team. As a self-proclaimed only child that's had health challenges that she could only address by doing it herself, I've been very much kind of, if it needs to get done, I'm going to do it. And it wasn't until I realized not only the benefits, but the joy that comes along working with a team that, my business really took off. And more importantly, my ability to help people and add value to people really took off.
Gosh, I love that. It's so true. Yeah. When I first joined Raise Masters, they sent the book Who Not How. And that, you talk about a light bulb moment for me, was just like, wow. Same thing, right? Always did it myself. My grandpa was an entrepreneur, built a construction business, always said, if you want things done right, you got to do it yourself.
Yep.
It's just absolutely not true. At least not today. Maybe back then it was, but it's certainly not true anymore. So I love that. What is it about your career that makes you feel like you're fulfilling your why?
The individual stories I hear. I have a physician who actually used to personally treat me that wants to be able to continue to work in his specialty of medicine that isn't very financially rewarding, but gets to stay in that position and still maintain his lifestyle because he's passively investing with me and earning income on the side. I have another woman who has a special needs child, and she knows he might not be able to, or he likely won't be able to financially support himself after she passes, and she wants to leave a legacy. So he always, has the ability to care for himself. Stories like this, I think about constantly. They inspire me. They almost bring me to tears because, while I'm not doing it, I get to help them, on that journey and be that connection point to amazing investments that can help them reach their goals.
Wow, that's incredible. I can only imagine how impactful that is, and obviously a true testament of what you're doing. So that's awesome. Favorite non-real estate or investment related book?
I don't know if The Creature from Jekyll Island by G. Edward Griffin counts, but
yes.
I get it. Okay. Yeah, it is probably the top, aside from maybe the Bible, the top book I've ever read in my life that's impacted me. It's a must read for everybody.
You know what? Actually, I've gotten that one other time. I'll have to remember who gave me that. It's on my list. I have a big, long list. I need to publish it probably at the end of the year. That would be a cool end of the year post, but
yeah.
And like mark down like the top 5. And, but yes, that one was actually mentioned one time. I'll have to figure it out. If you could have any superpower, what would it be?
Related to business or unrelated?
Unrelated. My intention when I first wrote this was like superhero stuff, because I'm kind of a nerd for like comic books and stuff. So, okay. But you know what? I've had people who say, I wish my superpower was underwriting. So all answers are acceptable here.
I've always wanted to be able to sing. I've got a really loud, booming voice for my tiny 5'2" frame, but I can't carry a tune to save my life, as some people's ears can suffer from. But to be able, I think singing is beautiful. It's amazing. Yes. It can really impact people in beautiful ways. It's not a gift I have, but yeah, that's what I would love to have.
That's so funny you say that. I have said the same thing, and we've got
Really?
music in my family. But see, I'm different. I'm very loud, but I'm 6'4", right? So like just big and loud. And I'm like, man, if I could just tone it down and sing a tune, people would just probably look at me just a little bit different. But nope. Instead, I couldn't carry one in a bucket. So
same. That's so funny.
I still sing. Please don't let people think that stopped me from singing. I love it. Cool. Last one. What's the best way for people to get a hold of you and learn more?
Yes. So as mentioned, I'm on LinkedIn. So my last name is spelled a little weirdly, so I'm sure you'll put it in the show notes, but I am just Amy Sylvis on LinkedIn. And then sylviscapital.com is my website. You can learn more about what I do, get in touch with me there, and see what we've been up to lately.
I love it. We'll link it in the show notes, make it super easy. Amy, thank you so much for your time. This was absolutely incredible.
Thank you. This was incredible. I really appreciate the ability to serve your listeners today.
Absolutely. Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.